The short-term momentum of this bullish move seems to be gone. So in today's video, we're going to be taking a look at that. We're going to take a look at the long-term implications of what this move is going to do, what the next steps are for the market. We're going to take a look at the VIX, the dollar, the bonds, the SPY, the IWM, and the NASDAQ. So without further ado, let's get started with the video. First things first, the dollar clearly broke the little downtrend that was being made and closed above the most recent highs. So we know that the dollar has an inverse relationship to the market. So if the dollar is doing well, that means that the stock market should be falling. So given the fact that the dollar literally, this is a very, very bullish close on the dollar, that means that it is weak for the stock market. And you can currently see that the MACD on the dollar is starting to move up as well. So once this crosses above, that means that there is even more room to the upside. So now generally, when something like this does happen, a very strong move like this, we could get a bit of a pullback and then a continuation. But overall, regardless, this is a very bullish move on the dollar. And even if we do get a bit of a pullback, this is still very bullish in the overall. So even if tomorrow we get a pullback and the market bounces a bit, regardless, the momentum of the dollar is still very bullish currently. Now let's take a look at the chart of the 30-year bonds. We know that the bonds have a bit more of a correlated relationship to the market. So if the bonds are doing well, that means that the overall market is also doing well. Currently, the bonds are not showing as much strength as they need to. We can see that the overall momentum of this MACD is moving up, right? Which is bullish, fine. But we're not getting extreme closes above any levels of resistance, but the bonds are holding up, right? So technically this isn't completely bearish. It's just not showing as much bullishness. So still, it's neutral to bullish, the fact that it's not completely showing weakness, right? So until then, right? So even if this continues up like this, as long as the bonds the bonds just need to close above these local highs, really. And once it starts showing strength and we get closes above, then that strength can translate into the market. But until then, just the fact that it's not completely capitulating below levels of support is a good sign. All right, so there's that for the bonds. Of course, it's not giving as definitive of a it's not giving a definitive enough direction as the dollar did, because the move of the dollar is much more dignified, right? But the bonds didn't really give that to us. So there's that for the bonds. Now let's go ahead and take a look at the VIX. And for the VIX, we know that the VIX has an inverse relationship to the market. If the VIX is doing well, that means that the market should be falling. And today, the VIX had a bit of a green day. The MACD is curling up. We didn't get a close above 20, which would have been a very, very bullish move on the VIX. But we got a close above the prior close and we held support. We're still technically in a bit of like an uptrend, but it's tough to say. This isn't as dignified of a move as the dollar either. So similar to the 30-year bond, the VIX is not giving as clear-cut of a signal of direction. All right, so there's that for the VIX. Now let's just go ahead and take a look at the overall indices market and the stock market. All right, so starting with the SPY. Clearly, we didn't get a continuation upwards. Bulls this morning did not have enough strength to retest anything. And basically, once Powell began to speak, at 10 a.m., the market just capitulated down. And actually, it started to capitulate down before he even began to speak. So it started capitulating at 10 a.m. He ended up beginning to speak around like 10:20 or 10:30. So yeah, the market ended up just falling very, very heavily intraday. And this is very, very weak. We closed below 400. We closed below 399 with a very solid red candle like this. This is very weak. The dollar literally closed above its recent highs. The SPY closed below the recent support levels. So momentum is clearly not good. Momentum is very bearish, clearly, right? So like I said, I was showing on the dollar's chart. the dollar had a very big green move to the upside. We could get a bit of a pullback and then a continuation up. So if we get this pullback on the dollar, this would equate to a bit of a bounce in the market and then a continued fall. So this pullback on the dollar and a continued move upwards on the dollar would equate to a bounce and a continued move down in the stock market. So that is essentially what I think could end up happening. This is a very bearish move on the SPY. But of course, you know, we have Fed Powell speaking again tomorrow morning at 10 a.m. And we also have, let me just open up the chart. All right. So as you guys can see, we have news tomorrow morning at 8:15 a.m. Very important news. And then we have Fed Powell speaking again at 10 a.m. and more news being reported at 10 a.m. as well. So tomorrow morning is going to be very, very important once more. The price of the SPY and everything is going to be heavily dependent on these news. So pre-market and at 10 a.m. So you can clearly see this is the chart of the SPY, right? Now, when you look at the NASDAQ, it isn't as weak as the SPY. But then when you look at the IWM, it is relatively the weakest out of the three. So you can see the IWM is retesting the lows. The SPY is not retesting the lows yet. The SPY, and relative to where the IWM is, would be at 392. And relative to where the IWM is, the NASDAQ would be at 288. So clearly the IWM is the weakest at the moment. And another thing that we could do is we could go ahead and take a look at the large tech stocks to see the overall trajectory of how strong everything is. Apple, first of all, this is honestly one of the least likely things to happen within a day. We filled the gap down. So had we not have filled the gap down, I don't think that the market and everything would have fell the way that it did. But this is a very, very funny, just the fact that they dropped this like this pretty perfectly into the gap. It was very interesting to see. So there's that for Apple. Obviously, Apple doesn't look very good, but it finally went back and filled this gap. Worst case, we could move back down to 150 and get a bit of a bounce back up to 151, 150. And then depending on how the dollar goes, we can continue moving down. But clearly, this is going to be a very major level of support for bulls. 150-ish. 150, we're going to see if Apple bulls can maintain the price and continue moving up. So there's that for Apple. Microsoft, clearly, I was showing you guys how 257 was acting as resistance yesterday on Microsoft. Failed. We retested it today, couldn't break above, and we continued lower. So Microsoft clearly doesn't look that great either. Google, first reversal candle, nothing too crazy. Amazon, very similar. Take a look at Netflix. Netflix broke today's lows. Meta. It's just silly to trade, to be honest. But then Nvidia had a great opportunity to re-add to shorts as well, continued lower, and then AMD was crazy today as well. But overall, tech stocks aren't showing as much weakness as the IWM, clearly, right? So the tech stocks are still holding up value. We didn't take a look at Tesla. Tesla is almost breaking a new low as well. We're trading outside of the lower B band. So are we going to gap down on Tesla? That would be pretty interesting to see if we gap down. And then if we open outside of the lower level of the Bollinger Band, if we end up opening outside of the lower level of the Bollinger Band on Tesla, that would be a pretty interesting long opportunity in my opinion. It could mean that we get a bit of a bounce intraday. And depending on how far we gap down on Tesla, that would be a good opportunity to just continue averaging down into calls potentially for a bounce. Of course, with like intelligent position sizes and everything like that. Obviously, you're not going to go all in. The market can continue falling lower, but overall, still pretty would be a pretty interesting opportunity if Tesla gaps down pretty heavily to go long at the open. So yeah, aside from that, there's not really much else to look at. The dollar was very strong in general. This is a very, very, very weak candle. The momentum should continue bearish, but if the dollar gets a bit of a pullback, if these levels of support can hold, and then we get a bit of a bounce, because the only thing currently is that we held the 618% fib pretty perfectly on the SPY. So if we had not held this fib level so perfectly, I would be much more bearish. If we got to close below the 618%, then I would be way more comfortably being bearish, but we held this level like algorithmically almost perfectly. So that's the only issue here. So the only issue meaning for a bearish bias, and going long here is still very, very, very risky. So the fact that this happened is not a great opportunity for bulls, because this is just a very early long opportunity. Bulls would want this to fall down lower and go long on like a lower dip. And then it's even ugly for bears, because you don't want to short after a huge move, right? Bears would rather a bounce to add to shorts instead of going short after a huge move already happened. Basically, if you end up going short down here and we get a bounce back up to 400 to 401, then your position is underwater. And then if we add to short there, it's much better to basically add to short on the bounce. That's the dilemma for everyone currently in the market. And yeah, the next few days should be very interesting. Powell's speech is also going to continue to be interesting tomorrow. I guess we'll have to find out. So yeah, regardless, going to be a pretty fun few days. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. I will see you guys bright and early tomorrow morning. Thank you.